Hey everyone, welcome to this week's episode of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and today we're going to deep dive into a lot of the whipsawing that we're seeing in the market this week. Some people may be surprised to have seen Bitcoin hit new all-time highs this week, but as we've woken up today, heading into the back end of the week, we're back down, back below weekly open prices. So what's happening this week to cause a lot of this movement that we're seeing in the market? Because we can see it wasn't really just a Bitcoin-only story. We saw a lot of altcoins, particularly Ethereum, really threatening to make new all-time highs. Prices it hasn't seen since 2021. Now, we laid out last week a lot of the ideas that we're going to touch on today, which were the net results of why we were expecting this week's data releases for inflation to be really meaningful this week, and they certainly didn't disappoint. So what we saw at the start of this week, Tuesday, 10:30 p.m. Aussie Eastern Standard Time, there was an overwhelming tone from the Fed and the policymakers, as we spoke about at length last week, that inflation needed to materially cool down. Now, the market has taken an as expected result in inflation at the start of this week, no real rise, almost as a hall pass to really get very sentimentally bullish. Now, we even saw the year-on-year figure, in particular for CPI. The consumer price index dropped to 2.7 when the forecast was 2.8. So you could infer that basically that might have been a catalyst for a lot of the market to potentially look that, hey, look, the Fed is definitely going to drop those rates in September. We're seeing inflation come down. And then what we basically were dealt with overnight, coming into Thursday's data releases, PPI. So basically the wholesale cost of inflation for goods and services. So you've got the consumer on one side, you've got the producers on the other side. You could argue that the producers are the leading indicator in a sense because the consumers will eventually buy off the producers, just to state the obvious. But we saw an absolute hot print on that one, 0.2% expected in a month-on-month movement, but we saw a 0.9% increase. Now that could be a potential reason that we did see a lot of the swing that we've seen this week to date. Now the real key takeaway from here is, okay, it feels like the market doesn't have a clearer read on how inflation is being viewed right now, with a mixed bag of data as well as a mixed bag of emotions to go with it. What is the market meant to make of this, right? And it's unfortunately not going to be until the end of this month that we really see the next big key piece of inflation data coming out. So really, I guess the key takeaway from today is the market was obviously optimistic, but has it been dealt a very harsh reality that inflation is really not checked as much as the market expects? That's what I think we're going to see play out over the coming days as we head into the end of August. Now, there's also some interesting topics to talk about throughout this recent flurry of activity that while we wait to see if the market continues to hold its trend higher, or if we do see some sort of cooling off, the market will show us that in the coming days and weeks. What we have seen is a potential resurgence in the market's confidence. Now, the way I'm describing this from a data perspective is if we think about Ethereum, the second largest crypto asset by market cap, if we think of that as a proxy for the market's appetite away from Bitcoin, we can actually create a chart like this, so where we divide the price of Ethereum and Bitcoin. And all you really need to know here is that when it's going down, there's a market preference for Bitcoins. But when we're seeing Ethereum now outpace Bitcoin since May, we're seeing a real shift in this whole sentiment when we're weighing the two up side by side. In fact, the valuation of Ethereum versus Bitcoin, again as a proxy for risk, we're seeing it return back to levels that we haven't seen since the start of the year. In fact, we're making new highs. So while we still wait to see if the market is going to continue higher, or if we're going to see some sort of cool off now as we head into the back end of Q3, really what we are keen to understand here is that the market might be mentally checked back in. Obviously, there's been a lot of curveballs this year with the tariff war and everything else that's going on the geopolitical front, and interest rates not budging. There's a lot of reasons why the market should be hesitant. But this renewed interest from the corporate perspective for Ethereum treasuries, really, I think there is this overwhelming theme that we could see a rotation back into potentially some assets outside of just Bitcoin as we move forward. And that's a key trend to understand as we head into the back end of this year and the start of 2026 and how that's going to evolve. And we can reiterate the demand that we're seeing. It is coming from an institution-led perspective, similar to what we saw with Bitcoin when its ETF really started to get some traction. This chart shows the ratio of how much Ethereum are we seeing trade on those exchange-traded funds through those institutions in the US versus what's the market trading just through generic spot markets, which what we're used to today. So we can see there's been an absolute steep incline in the total market share that the ETFs have had. Without these ETFs being around, you could argue that a lot of the demand that we're seeing for Ethereum, it may have not been present. There may not have been this propensity of appetite for Ethereum as we're seeing in the last couple of weeks. So we can see that this is trending higher. And the key takeaway here is obviously is that if we see this continue to trend higher, we could potentially see the demand for Ethereum continue, which will be obviously reflected in its price. But a slowing down here would also be obviously a cautionary piece as well. As this has been a major driver for demand of Ethereum, we could see demand diminish a bit and potentially some sort of pullback coming. But what we're clearly showing here is that the ETFs are having a large impact on the demand of Ethereum as an asset right now. But that's it from us here at Swyftx today. Hopefully you found that insightful. We'll have some more things to break down next week. We'll see how the market's progressed, knowing everything that it knows now after quite a volatile week. I hope you guys have a great weekend and we'll catch you next week. Thank you.